We are Even I Can Trade. You will be assimilated. Your trading knowledge and distinctiveness will be added to our own. You will click the like button. You will subscribe to this channel. You will share this content with at least one other friend. Resistance is futile.
You see it? Yeah, that's right. You see it. You see that. Yeah. Another successful day. Pretty low stress overall. A little bit of stress, but not much. Pretty trendy day overall. Started out pretty rangy, which I like. Established a range pretty quickly. Got in on a really good trade right here on this low. Obviously don't know if that's the low of the day at the time, but we followed our rules, got our stochastics in line, followed our plan as far as looking for a low point of the day, high point of the day, or trying to find one anyway, and getting our strike price below a pivot or two if we can, but I was only able to get one this time because the market was already up, and got us a nice little put off. This was like 50 points away, something like that from the price action. Didn't even have to worry about it at all. So do we like low stress days here at Even I Can Trade? I don't think so. We like danger, not really, but it seems that way the way I trade, because I also got into a call knowing that the day was going to be a higher day, but also knowing we had our blockers, we had our linemen in the way, we had our offensive line, we had that beef in the way. So when I saw the market push up here, pushed up pretty quickly, I knew it was going to run up to this pivot right here, but I also didn't want to lose too much time in the day as usual because state of decay is a thing. So went ahead and entered the market at 4110 right here. And the reason I chose 4110 again, because I've got my lineman in the way, especially the big fat 4100. It doesn't want to move. The market loves to try 4100, but it doesn't like to try to bowl it over. It just likes to hang around because I guess it thinks it looks cool sitting next to it or something like that. So we've got this blocker in the way. I knew I was going to get a little bit of interference if the market tried to go past R1, which it did give me a little bit of interference. That bought me some time, valuable time. That actually set my whole day up where I didn't really have to worry about it, because by the time it started to push, it was pushing too late, because when it pushes, it's not going to push straight up, right? Unless there's news or something like that. It's going to push at some sort of an angle. And if my angle on my trade beats the angle of the market, then I win. If you are in the chat room, the Even I Can Trade Discord, you will see me calling all of this stuff out live. What I said was the market was going to probably spike. This is when the market was probably right here. I said at some point the market is going to spike up and then drop back. Said that probably an hour before it actually happened, right? So you can see the market going, steady. Then it spiked up here. Boop. And where did it spike up to, y'all? Pivot points. Yes, the pivot point. That's right. So you can see the pivot point right here, our magic pivots, and it magically said dink, and it said Duke, right? So we also had that blocker in front of us right here. So we've got plenty of interference in our way for our call trade. So I lied when I said it was stressful. It really wasn't that stressful, but the people in the chat room were kind of stressing out a little bit. Aren't you gonna close it? Aren't you worried? Aren't you this? Nope, I'm good. What I would have been worried about is if we broke this particular trend line right here early, or moderately early, I should say, and we broke this R2 line, because we would have only had one piece of beef in the way. So if the market was trading right here, something like that, and endangering this green line that says 4100, yeah, I would have started sweating a little bit and probably would have closed the trade, because it wouldn't be looking good. That's that on that trade. Now to the good stuff. Spreadsheet. So I made some updates to the spreadsheet that I'm excited to share with you guys. Number one, trading expectancy. And this could be a whole video. This area right here, trading expectancy. I came across two trading expectancy calculators. Trading expectancy is something that I ignored for a long time, partly out of shame, because I have such a horrible what is it called? Profit reward ratio, whatever you want to call it. The ratio on call spreads, especially the way that I trade, is pretty deplorable on its face. But what you have to realize when you're trading, when you're talking about risk reward ratio, is it's not what you see on its face. You have to factor in, number one, your risk management strategy. So I don't care if you are risking $1 billion to make $1. Where are you going to close the trade when it gets in trouble? Where is your stop loss management? Is it that full $1 billion? Are you really going to wait till $1 billion drains right on out of your account before you close that trade? I hope not. If you do, let me know what trades you're making so I can be on the other side of it. Anyway, so you have to factor that in, number one. Number two, you have to factor in what your actual win looks like, because anybody can say, I have a 9-to-1 risk reward ratio. I'm risking 1 to make $9. But if your $9 looks like a pinprick when I go to your risk graph and the market has to close exactly on 4172-58.927 for you to get that full 9, you're not really getting rewarded 9, are you? Because guess what has the best risk to reward ratio out of anything that you can do? The lottery. We all know how that works out. So you have to be realistic when you're putting these numbers in here on both sides of the risk reward ratio. So with my particular trading style, I know that I have about a 95% chance to expire worthless, which is exactly what I want. This is our win rate. You have to be realistic here as well, because as you tighten up your loss management, this is going to drop. The tighter your loss, the tighter your, I'm blanking live right now, y'all. Y'all know what I'm trying to say, and y'all probably yelling at the screen. The tighter your stop loss is, the lower your win rate is going to be. So you have to get a little bit of real world data so that you can accurately represent this number, because you don't want it to be too rosy for what you're doing. You want to be accurate here. So I can tell you, if you're trading spreads, if you're trading at my delta, something like that, you're probably going to be at worst maybe 85%. If you're doing like a 2x stop loss. I think Tammy Chambliss did data on that, so you might want to refer to her channel, because I think she did some like back testing on, what the run rates are for different stop losses are and everything like that. But just that particular piece of data. Anyway, your win size, luckily I know exactly what my win size is going to be. I actually undercut it here. This is I'm only doing this for one contract, but this works for larger numbers, whatever you want to do. But for one contract, I'm only targeting $20 for my win size. Your loss rate's automatically going to be the opposite of your win rates, automatically calculated. Do not type in here loss size. So this is what your actual risk is. Okay, I don't care that the spread, you need to put up $500 to do the spread. What are you going to get out at? So I'm actually going to change this to $70, because I know I'll get out at $70. I've done it before. I do it all the time. Not all the time. $70, right? Trade frequency. How often are you going to trade throughout the year? Okay, 220, there's 251 or something like that trading days in a year. I just do 220 for vacations, whatever. You're sick, COVID, who knows? Wife yelling at you. And this is your expectancy. Is your expectancy positive, right? If your trading expectancy here is positive, you got something, chief. You got something, right? But you can play around with these numbers and see what your limits are. So if I change this down to an 80% win rate with these numbers, it still works. If I up this to, say, I won't get out till I'm losing $120, then blam, smack, right? You don't want that. What if I boost this back up to 95%? Blam, now we got something again, chief, right? So you can play with these numbers and see where do you need to be where you need to be. Of course, that makes sense. You know it does. So say something like that. So if I give myself a pretty bad one, right? Let's say I'm horrible at picking strikes and stuff like that. I'm only going for $20. I know I'm going to get out at $70. This is where my edge is going to be. And then I got a plan, chief, right? So even if I do this, as long as I keep my losses small, yeah, that's it, small, then I'm good, right? But once I let that get out of control, I'm bad, right? We don't want that. So what is my limit? Like, how big can I let a loss get? Where is my like break glass, whatever? I don't know. Let's find it, right? I say 110. There you go. You're pretty much at break even. So you know, if you're sitting in a spread and that thing is clocking, clicking, clocking up, and you're at 30, 40, 50, 60, negative 70, 80. Okay, it's time to get out. Time to get out, man. Time to let it go. Okay, come back and do it again tomorrow, right? But you can let it go up to here and still pay at least one bill that year. I don't know. All right, so a different expectancy calculation I came across is this one right here. It's somewhat similar, a little bit more simple, but this one just gives you kind of like a ratio. So for this one, same kind of concept. You put your win rate right here. This one, you're just going to put your win reward ratio in. So if you have a 1-to-2 risk reward ratio, that translates to calculator world, Excel world 0.5. And if you can't figure it out, don't want to figure it out, take out your handy calculator and say, oh, I got a 9-to-1 risk reward ratio, and you're gonna put 9 in here. Okay, so you got that. And if you have a, I don't know, 1-to-9, not 1.9, 1-to-9 risk ratio, you're gonna put something like this in there, and you're gonna see what that looks like. It's not gonna be pretty. Yeah, so you pop that in there. You want to aim for a 0.5 ratio or better. That's what this means, okay? So if you don't like this calculator, you can do this calculator, whatever you choose, all right? Also, I keep forgetting to mention this. I've got 500 days of the SPX trades in here, all the way going up to January 6, 2023. May update it, may not, I don't know, but what it does is it gives you some interesting stuff. So for example, the average daily change in that time frame is 38 points, pretty interesting. 0.91%, which I thought was kind of large, but 0.91% was the average percent change on a daily basis, right? Pretty cool stuff, but this is the real good stuff right here, right? How many days was the market up above 2%? 26, down 2%, 28. What's the percentage of days? This. What is the chance if you're trading outside of that you're going to end up out of the money, which is what we want? This. Right? So if you can get a trade that is 2% out of the money, take it, right? So there you go. There's that, but that's not the good stuff. Anyway, let's get to this. All right, so this, I like this a lot, man. This is worth the price of entry all day. My wealth planning spreadsheet. So I've made some updates. I fixed some errors in the calculation, and it should be working flawlessly now. Haven't found anything that broke it really. You can even put negative numbers in here now. So if you're like taking more out of the market than you're earning or whatever you want to say, you can now kind of pop that in there. Anyway, so the reason why I like number one, I added some descriptors in here. So if you're not sure what a particular column is for, I have an exhaustive explanation. If you just hover over these little triangle looking things in the corner, you can tell every column is why it's there. What do you do with it? Can you type in it? And the answer is you can only type in the blue and in the green. That's it. And in the notes. That's it. Outside of that, if it's got a formula in there, don't type it because you're going to break it. Okay. Very sensitive. Anyway, so for this particular example, I'm just going to go through my personal example that I've been working with lately to kind of game plan what I want to do with a specific account, or as if I was going to start from, say, $1,500, right? What would I be looking at? So starting with $1,500, I'm going to aim for 4% per day, which I have been doing, which I've been pretty successful at thus far. So this is very realistic. And this is my growth rate here. And I added a little note section so you can kind of take a couple of notes. So like, for example, the $1,500 account, I actually want to leave one contract set aside. I don't want to trade with 3 contracts. I actually want to trade with 2. And I want to do a iron condor to kind of make up for the extra money that I'm losing off of not doing 3 full contracts per side. So that usually yields me about 60, 70 bucks, something like that, maybe 50, but on average about 60. So that's what this means for me, but you can put in whatever you want here. This is kind of my growth rate. I'm not going to start taking out money out of the market for me until I get to about 5,000 bucks. So that's what I've got here. Start taking out savings and putting in the savings. And you can see here that on this particular day, when I hit 5,000, I should make about $200 that day. My trading account size by that day should end up being about $5,240. Recycle profit is money that I'm going to put back into the account for tomorrow, or keep in the account, I should say, from my daily profit. Excess profit is the amount above 5,000, or the amount above this flat number that you see, because this is money that we're not actively trading within the account. This is just kind of like extra that's sitting there waiting to be compounded. And you can see right here, I'm looking at about 10 contracts worth of trades, although I'm only going to be doing a portion of that, just like above. So I'm probably going to be using about 70% of this amount to actually trade with. So I got that note there. So I want to keep in mind of that. 30% is, I'm going to be taking 30% out of our daily profit. That's going to leave us with 60 bucks to add to our new savings account that is hopefully a different place from our trading account, just to make accounting easier, because I do not want to put this at risk. That's the point. So our total money that we have earned, if you factor in all of the stuff, savings, everything, trading, should be about $5,300 at this point. And out of that money, total money, we have about 94% at risk. So the goal here is to get this number down. That's going to lower your risk. That's going to lower your chance of blowing up the account, all of that kind of stuff. What this says is that if we blow up our account, we're going to lose around 94% of our money. Now, according to my plan, it's going to be a little bit less because I'm only using 70% of the trading account, but you get the point. Right now, if we were to just pause here and trade like this and take out all of our earnings going forward, what this means is that we would be earning at a pace of about $45,000 per year. I like to see this number just to see what kind of pace that I'm on, because it helps me understand when it's okay to kind of dial things down, when is enough, all that kind of stuff. And then monthly income as well, because obviously I want to pay some bills with this stuff. I don't want to just make money to be making money, although I could settle with that. All right, so start taking out savings. So we're here. This is also an interesting number. This is a running profit number from when you first started. So you can really see just how powerful these options are once you get down to some of these higher numbers. All right, so I'm trading. I actually shift up to 50% savings when I get to about $10,000, because I want to start building up savings and taking it away from the market and getting it out of risk, because we're dealing with nuclear weapons right here. I don't want to expose to radiation, right? So I'm taking, and I up my pool to 50%, and we go from there. So here is something I learned from trading larger contracts, is you don't want to be trading big lots of contracts. It starts to get unwieldy. It starts to get hard to fill. You start to get filled in portions and lots and all that kind of stuff. It's annoying, and it messes with your projections. It messes with your time, all that kind of stuff, right? So I like to keep my contract number low. Like I'm talking like in the 20s if possible. I don't want to be trading like 100 contracts of anything, especially not spreads. My God. So I want to keep this around 20 if possible, at max, lower if I can. So here I might start widening out my spreads, or doing something to reduce the amount of contracts that I'm trading. Okay. So I got that note in there. Even though these contracts are still going to count up, I want to know that I'm going to start reducing my contracts while still trying to get about $420, which you can do that. So I keep going, trading. We're about 6 months in at this point, still going. Now I'm starting to make some real compounding progress because every single day at this point, I'm adding a new contractor to my trading account, and it's growing at that kind of pace. And pretty soon I'm adding like 2 contracts pretty much every day and going up. Now, also you notice my at-risk number is lowering as well because I'm taking money out of the market, right? So even though it's out of the market, I still consider this my total portfolio. I just don't want it sitting in the market or at risk or anything like that, or me to be tempted to trade with it. So I've got it out of there. I'm probably going to put it in another portfolio, like a dividend portfolio or something like that, but I don't want it in my options account. So I got a note here for myself: start paying bills at around $75,000 in the trading account. So why I put that note for my own purposes is at this point, I am making some good money on a daily basis. I'm looking at about $3,000 daily profit. I think anybody can do a lot with that, but what I'm gonna do is I'm gonna split it in half, take half of that, pop it right back into the trading account, and the other half obviously is going to be split between savings, and then that should be enough excess for me to build up my savings and to start paying some bills with. Because let's say I pop $1,000 in savings every day, I got $500 left over per day. That's a good amount to pay some bills with. I don't care who you are, right? So here, what I also looked up for myself is I don't want to be doing spreads forever. You know, I can only widen them so much before I still have to increase my contract size and everything like that. So eventually I'm going to swap over to naked puts and naked calls. There's plenty of reasons why. I might go into that in a future video, or I might have touched on it already, but I'm gonna swap over to naked puts and calls just for my risk profile and risk management. And I've got this note here saying that if I'm gonna do that with the SPX, I can do that and aim for about 0.4% per strangle. It's considered a strangle instead of an iron condor once you're doing naked stuff. So I can aim for about 0.4% and still keep my profit profile the same way that I do it, which is basically trading around the 2 times expected move mark. So I looked that up in Thinkorswim, did all that math, and that's where it is. That will equal about 100% gain per year if I can maintain a 0.4% per day rate. And I'm fine with that, right? That's pretty good. Yeah, it's me, right? So that's the note here. I can do that around this level, which I think one naked put on the SPX is going to require about $70-something thousand, $78,000, whatever right now. So I just did it around $100,000 for myself. And once I get to 250,000 in savings right around here, I'm going to transfer that to an actual managed portfolio. That is probably going to be a dividend growing portfolio to start my retirement, because my ultimate goal is to have $2 million or even more now sitting there pumping out dividends. And that will give you around $100,000 a year in dividends. Okay. So that's my ultimate goal, is to put everything on autopilot. If I want to have the choice to do that. So that's what this is reminding me of. I hit that 250 mark so I can transfer. If you don't know, once you get into that side of the investment world and you want a managed portfolio, in other words, somebody doing the work for you, you're going to need about $250,000 to be able to get into those portfolios to do that. I'm not talking about an ETF or like a mutual fund or something like that. It's different. I'm talking about an actual managed portfolio with somebody that you know managing it. So there's that. I may or may not do that, but that's kind of like the goal. Anyway, so that's the next note. I keep growing and I've slowed down. You see, I've swapped over to 0.4% per day. And I'm still making lots of money. I'm making plenty of money. This is per day, y'all, not per week or per month or anything. This is per day. So $1,400 per day, $730 coming to my savings account, I can pay bills with that just fine because I've already got a nice kitty built up. So I don't have to keep pumping massive amounts of money into my savings. So I could maybe break this in half and take 300 and pay bills with every day, or do whatever I want every day. And then the rest of it, pop it into savings. I can do that if I want. Here, we just keep right on going. The only thing I did change up here, which I may or may not keep, haven't decided yet, is I up the savings to 90%. Up the savings to 90%. I may not do this. Actually, I don't think I am going to do this. So if I've never shown you before, if you want to change these numbers, all you have to do is click on this, grab this little doohickey right here in the corner, and slide it on down. Slide it on down. Yeah, I forgot. There was a patch that I forgot to change. Anyway, so still, I think I'm gonna just do the 50%, because the reason is why I'm comfortable with that is because this 0.4% is so much more conservative to get than doing spreads. You know, I feel pretty good about this because it's pretty far away from the market. Let me see. There was another note that I had somewhere, right? Nope. Yeah. Okay. Once I hit 1 million total million, which is this right here, you know, I might divert more money back to trading, like decrease the savings rate here, because this is kind of like taking on a life of its own at this point. So I might start growing this. I may not, I don't know, but that's kind of the note that I like. But anything that I do, I should have enough excess gains to be able to comfortably live off of and not have to do anything else at this point, just off of this portfolio, and still maintain my savings rate, still grow the account, still do everything else I want to do, and live off of it. You know, just slice a little piece of the pie off. I also might switch over to the NASDAQ at some point. You have to have a little bit more to do the NASDAQ naked puts. I think that was like 230,000, 250,000 per naked or something like that. Let me see. I think I still got it. Oh, not 20 of them. Yeah, about 230, 250 something thousand to do the NASDAQ nakeds. So at some point I'll probably switch over there, just again to keep my contracts down. And then yeah, we're just cruising, man. We're just living life at this point, man. And the numbers just start to get stupid, but they're stupid in a reasonable way. And you can see once I get down to like month 43, I've reduced my risk even further. I've cut that even in half. So instead of using this full amount, maybe I'm using half of this to generate this income at that point, which is being even more conservative. Or I'm using more of this money, but I'm getting further away from the market where I'm only expecting to get 2% from the trade instead of 4%. So I'm getting further away from the market, being even more conservative at this point. So I'm trying to get more and more conservative because I can, right? I've got so much excess at this point. I've got such an advantage in the market. I don't need to push. I don't need to take as big a risk to do what I want to do. So that's my sheet, man. I like it. Now you can customize it any kind of way that you want to, is to fit you. Put whatever notes, whatever striations or whatever you want for yourself in there. It is located in the Discord server, in La Discord, right in the tool right there. And you just got to scroll up a little bit or hit this little pin message and you can get the link right here and make it all yours and have fun with it. Now you're going to need a role that has access to this room, because if you come in here just as a guest, as a gray worm or whatever, you're going to see the room, but it's going to take you to this thing right here, right? So you have to pick a membership role that's going to allow you to see it, which is basically these two right here. Once you pick your membership, you'll be able to get access to the spreadsheet and copy it and love it and make it your own and do all that good stuff. I think it's worth its absolute weight in gold, and I'm constantly updating it, bringing new stuff to it. So if you see anything that you do want to add to it or like about it, you can do that. I got a suggestion to add my trading history to it. Not sure if I'm going to do that or not, because I've already got so many YouTubes with my trades up there and already, but we'll see. So you've got that there, and I think you should try it out, man. Just try it out. I think you'll like it. All right, I'm out, y'all.
Assimilation to the collective will begin by joining the Even I Can Trade Discord. Link in the description of this video. You will join a tier based on your distinctiveness, or you will join the general area with no economic impact. Excuses are irrelevant.